Good morning, everyone. I hope you've enjoyed today's session so far. My name is Maria Harris, and I'll be your host for this panel session where we're looking at the changing landscape of lending. I've been in the mortgage market for around 15 years, mainly with lenders, but I'm now a non-exec director with United Trust Bank, and I run my own consultancy business, helping building societies, mortgage lenders, and intermediaries with their digital transformation. So I'm delighted to have such two esteemed guests with me today who are going to share their experience of how they've used technology in their own businesses and to give us some insight into what they think the future might hold to improve the customer, broker and lender journey. So in no particular order, please let me introduce Alex Beavis, who is Head of Mortgage Products at Skipton Building Society. Alex is an award-winning commercial leader with a depth of experience in the development and delivery of customer-focused products and propositions. He's a mortgage professional with a track record of delivering P&L improvement, formulating strategy, and fostering a team culture of empowerment. He's a regular blogger and a speaker across the mortgage sector himself. He's passionate about driving forward innovation in the mortgage industry to enhance the customer and broker experience. Welcome, Alex.
Thanks, Maria.
And we have Matt Lowndes, who is Innovation Director at Mortgage Advice Bureau, having joined the business from Coracle Mortgage Advisors last year, where he was the founder and former managing director. Using his nearly 20 years industry experience, Matt's role at MAB is to ensure the firm's digital strategy aligns to every area of their business, both internally and externally, to achieve the best possible customer experience in the industry. He's a 3-time British Mortgage Awards winner, and he's really passionate about technology and innovation within the mortgage sector. In his spare time, he's an avid AFC Wimbledon fan as a season ticket holder, owner, and the former assistant kit man. Welcome, Matt.
Hi, Maria.
Hi, nice to have you both. So I guess if we are talking about changing landscapes, we should probably start with the biggest challenge that we're all facing right now. Everybody in financial services has had to adapt to the impacts of COVID and not been able to work or meet face-to-face in the way that we normally would. So which technologies have you implemented to keep your business up and running? And which of these, if any, are you going to keep post-COVID? Could I start with you, please, Alex?
Yeah, sure. I guess the very first and biggest and most obvious challenge was how do you keep the business running when nobody's in the head office? And that was a challenge that businesses have resiliency plans and continuity plans, but they'd always been kind of focused on things like flood or server outage, not the fact that your people can't physically get to the desk and do their jobs. So the first challenge for us at Skipton, and I'm sure it's one that's shared not just in the financial services sector, but more widely, was how do you transition everyone to working from home and keep the bank going, as well as providing the kind of level of customer experience that your customers and brokers have come to expect. So for us, that meant gearing up our remote access from a kind of capacity of maybe 100 to 200 colleagues to basically everyone. That took a couple of weeks. We had throughout lockdown and pretty much today, we've only got between 10 and 15% of our workforce in our head office, whereas at any other given point in time, that would usually be 99% of time with people working from home relatively ad hoc. So that was a challenge in itself. Getting access to things like Microsoft Teams. So we didn't use that before, whereas now that's kind of modus operandi for how the business operates. So that part of it was relatively straightforward and involved quite a lot of rapid investment in laptops and more server capacity. From a customer perspective and kind of keeping lending going, what we've decided to do is kind of bring forward some of our existing investment in tech to really focus on driving forward the pace of the customer experience. So we had already on our roadmap had investment in things like APIs for AVMs, an increased use of desktop, a new API for electronic ID and V, and a project that was looking at automatic income verification. And we were sort of kind of posed with one big challenge in terms of managing COVID, which raised the question of, do you continue to invest in these things, or do you stop all your development and kind of manage through the crisis? But our view was that those things had real customer benefit in the long term, as well as managing through the crisis. So what we did was continue with that investment and in fact try and pull some of it forward to get benefit now to help us while we knew that we were going to be under operational constraints from COVID. Mm-hmm. Aside from tech, the kind of other thing that we looked at was the non-value add manual processes that are much harder to do when you're working remotely. So what of those are absolutely essential to kind of creating a good customer outcome or complying with regulation, and which of those could we take away. So still very much a moving feast, but a lot of quick wins that we managed to do in a short period of time that helped us kind of keep the ship afloat and keep lending to customers.
That's excellent. And do you think you'll keep all of those post-COVID when things are whatever the new normal is?
I think so. The one thing we probably won't keep, which was an enormous help, was the online form that we built for requesting payment holidays. So we were one of the first lenders to introduce that. And what that did for us was mean that we weren't getting absolutely hammered on the phones when mortgage payment deferrals, or holidays as they were first called, were announced. We saw some lenders, their service for sort of non-payment deferrals really took a hit because resource had to be redeployed to manage the absolute overwhelming demand we saw for that. We typically, as a lender, we would see a handful of payment deferral requests a month, and we saw 20,000 in a couple of weeks. So operationally, that was something we'd never really prepared for, and had to develop new tech to deal with it. But hopefully we won't need that again.
Yeah, let's hope so. And Matt, anything on top of that MAB you've used?
Yeah, it's really interesting way Alex sort of alluded to breaking it down, I guess, into business requirements and how you help customers. So I think from our point of view, the video conferencing thing, we'd used it, but I don't think it had certainly not in the way that we've now become so accustomed. I think, people were really worried about what everything was happening behind them, or how should I dress, or do I really want to turn my camera on? So I think I believe that's here to stay, as I think it actually has become second nature now, and we're less worried about it. And I actually think it's going to be I think we'll see more video actually than telephone. I think it'll overtake it. I just think it's a nice way to communicate. I think we can see the reactions in somebody's face. It cuts down our traveling time. It just means, I guess the only problem with that is that actually I end up with back-to-back conversations, right? So you don't get your break between meetings where you used to get time to travel. You're sort of back to back, and you're sort of jumping off one to another. It's been really, I think that's been really fascinating. And our advisors have used it as well. So come back to like how we felt then, we've sort of we let them all have teams, all the people that use the MAB brand, we set them up so they could use Teams. We educated people how to use Zoom. We gave them sort of marketing materials that meant you could have backdrops or whatever it might be. And then from a customer perspective, we put in things like secure upload, because obviously you no longer could see somebody face to face, and a good chunk of our business was face to face. So how do we do secure messaging, secure uploads? We these are things were already planned in, but actually we had to accelerate the delivery of them. And now they're being embedded actually into the customer portal, so they're sort of they are just the way we do things. So I think it's been a real interesting change. I think things that maybe we thought, a bit like Alex, we're going to take maybe 2 or 3 years to come down the line, I think have probably been accelerated within 2 or 3 months. And I think the change has been incredible. And I think some of this will definitely be here to stay.
Yeah, I agree. I think technology acceleration has definitely been a theme across most industries in the way that responded to COVID. So yeah, good to hear that the financial services is keeping pace with that too. So looking specifically at building societies then, one of the biggest strengths of the building society model is their ability to make very human decisions and offer a more niche set of products where you can take the time to look at a customer's circumstances. But, inevitably that means high levels of manual intervention, usually lots of paper or lots of documents flying about. So Alex, have you seen any emerging technology trends that could help the industry to do some of that heavy lifting, but still retaining that personal touch that's so important?
Yeah, definitely, and that's actually sort of the fundament, what fundamentally underpins our proposition that we're trying to deliver. So as a lender, we know that why brokers and customers value us is that we can take a view. It's not computer says no. There's a person, there's an underwriter, there's a BDM that can listen to the story behind the case and get the richness of the detail, and we can come to the right outcome. But we don't see tech as kind of mutually exclusive to that aim. So what our strategy is trying to do is marry kind of best-in-class advantages of tech to actually free all those people that are great at making decisions and looking at cases to do that more of the time. So rather having underwriters checking bank statements and pay slips, we can use the tech to do that, which frees up the underwriters to look at income statements or complex self-employed cases or buy-to-let portfolio landlords. And we see that as actually a space where potentially building societies could be in an advantageous position moving forward. So rather than computer says no, for Skipton, it would more be computer says yes. And if the computer does say no, we've got people there to take a look at your case too. So trying to operate in that, almost in the Goldilocks zone between where the banks are, where very much automated driven, computer driven decision-making models, and the smaller societies that are purely human touch. We think there is a room for lenders that can do that very well, both things in the middle ground.
I like that. I've not heard that term Goldilocks zone before. I like it. I'm going to adopt that one. Are you seeing the same with intermediaries, Matt? Are they using the same kind of things for bank statements and income and open banking, maybe?
Yeah, I think it's really interesting. Your question sort of about the human is something we concentrate a lot on. I think mortgage advice should be about the human. Can we replace that? It's really interesting to Alex, right? Because what Alex has said is exactly what we need to do, right? We need to concentrate on the advice. We don't want to be about data entry. We don't want to be about document collection. We don't want to be about categorization of income, expenditure. You know, they're the things that actually technology can massively help us with. Yes, there's a cost to it. Yes, it's a tricky technology to put in to begin with, but it's getting better. But actually, how do we, you know, I did a lot of work on our fact find, and you know, let's just take a basic fact find that we would do. It's probably got 100 data fields in it, 80 of which can be delivered by they're like hard facts, so but they can be delivered by digital solutions. So whether that be IDing, whether that be credit reports, whether that be open banking, whether that be you know, using OCR to extract the data inside of a document to bring everything to life. I think that's where then we've got 20% of it is around the advisor speaking to the customer and saying, right, what is it you want to do? Tell me about your soft facts. Tell me about your life. How long are you going to plan to be there? So I guess it's a very similar approach to the building society, is that actually we need to get under the hood of what a customer wants to do. It's not just about pushing through as much, you know, as many applications as possible. Yes, it's nice that some of them are easy and simple and can go through, but actually often when somebody comes to a mortgage advisor, they do so because actually the situation is not vanilla, not easy, slightly tricky, don't understand the process, need some help. So they're the things for me. And I think the other thing we've looked at in terms of how we deliver that is like a personalized portal. So we can't treat every customer as the same. They are different. So how do we use that portal to communicate them in a different way? So, you know, somebody's requirements might, you know, they might want to talk to you by email. Somebody might want to use chat. Somebody might want to use instant message. Like you tell us how you want to communicate. And I think that's where we'll see a growth, where we've got this sort of direct communication, cut down the phone calls, as Alex said, because I think that will go. But then these kind of conversations we're having now become more enriched by the technology. So the technology is an enabler, not a replacer.
Yeah, no, that's a really good point. And I love the fact that both of you are really concentrating that right now on the customer and the customer experience. Do you think we'll get to a point where we have that same level of technology and approach between intermediaries and building societies, or between intermediaries and lenders, where brokers and the lender talk to each other that way?
I hope so. We're trying to work on it. I mean, it's been slow in coming, hasn't it? So, but you know, there are people who are really trying to push it, and they see the advantages in it. We have some great dialogue with lenders and building societies about the art of the possible. Yeah, I think it will happen. They're just sort of frustratingly slow, I guess. There's a lot of moving parts at the other end, but some are doing a brilliant job actually, and I think we will get there.
Good. I hope we do. I hope it's sooner rather than later as well.
So do I.
So in terms of all of this different technology, and we talked a little bit about open banking and APIs there, and there's a lot of other technology that is coming through as well. So Matt, given all of this big white noise kind of background around emerging technology solutions and the future of, like, especially big tech, so artificial intelligence, machine reading, using OCR, even distributed ledger, those kind of things, how have you been able to cut through the hype and find the solutions that your business actually needs?
So I guess where we've started is, what's the interaction? Okay, so let's take the example of open banking. I can see huge value in open banking, but I think it's not going to happen for a long time. And until banks decide that they don't need the physical documents, because it just provides a rubbish customer journey at the moment. I go and ask, I go and get a customer to use open banking. I get all the information. It makes the income and expenditure much easier. But then I've got to go and ask them for their bank statements as well, because the lender needs them. So that's that's a rubbish customer journey. So actually, that's great. It's coming, but actually, let's go back to the OCR. Let's get the documents. Let's let the technology read the document. Let's let the technology verify the document, and then that still has the same effect to an end advisor as it does, but it means they haven't had to ask the customer for the same thing twice, if that makes sense. Yeah. The other area I see huge value is in compliance, because a company like MAB, we do 13,000 mortgage applications a month. There is no way on God's earth that we can go through 13,000 different applications and check that absolutely every single one of them, human checking them all. So this is where the technology can look. Can we look at potential fraud? Are there some things that string together? Is the advice right based upon the information that we've collected? We should be able to look at things like that. Are there patterns? Advisors always using one particular lender over another? Is all the supporting documentation there? So this is where it can help the advisor and the customer. You've missed something. And then actually something really interesting we're looking at now is like how when we're going through our training and our competency, can we use speech analytics? So how can we, like when we're, if we record like a customer meeting like we're having now, can we play it back, and then somebody doesn't actually have to listen to an hour's conversation? They can just actually pick out the bits that are valuable. So did you mention protection? Did you go through the wording? Did you do this? So I think that's where actually that could be really exciting, is the speech side of it. And I think from a compliance point of view, it will mean that we can scale up without having to have the levels of people that we need on top of that, the human.
Yeah, that sounds really cool. I like that. There's a lot of work around speech analytics and natural language processing, and it's come on so much in the last few years. Alex, anything you guys are looking at in Skipton in terms of kind of big future tech?
Yeah, in terms of how do you decide which tech to back and which to invest in, I think our approach has been to focus on the customer and the customer outcomes, not on trying to fix processes that you think are inefficient. Because actually, what is it that customers want? Customers don't really want a mortgage, they want a home. And why do they want a mortgage offer quickly? They want it because it's certainty, and it gives them certainty around that emotional bond that they're making with buying a house or securing a remortgage. They don't care about credit scoring and financial crime and ID&V. That's all lender and industry talk. So when we focused on what tech do we invest in, the question becomes really simple. So how do you bring that moment of truth forward for customers? How do you bring it forward with more certainty? So the things we've invested in have been technology that helps us get there quicker. We're not at 14 seconds, but we are at same day offers now for a good chunk of our cases. And that's as a result of investment in building APIs up from the ground for things like credit scoring we already had, but ID&V, financial crime, AVMs, and what's the other one? And just streaming and the architecture around that enables the offer to be delivered quickly. And what that's done is for the right case that can tick those boxes, we can now offer same day. For cases where we can't, there's still all of the other support that we would have provided previously in terms of listening to the detail and richness behind the case to get the outcome. The other kind of thinking we've had is about being brave and trying new things. So we were one of the first lenders to try open banking with real customers and real decision making. And what we decided to do is how to pilot that was to not go full 100% and integrate it into all of our systems and processes, but just to try it in an ad hoc way to see whether we were getting the right outcomes. Mm-hmm. And the interesting learning from open banking was, from a lender's perspective, it was great. We didn't need the paper. We were getting a more accurate affordability assessment. It was faster from our perspective. But what let open banking down from our use case was customers weren't using it. They didn't really understand it. They didn't know the value of why we were asking them to give away access to their secret information and their banking and their passwords. And actually, a lot of them came prepared with their bank statements and payslips anyway. So that was an example where potentially we were a little bit ahead of the curve with it. And I think open banking is a really neat idea, but until consumers embrace it more readily, it probably isn't going to be something you're going to build your mortgage decisioning around. So that kind of agile mindset of trying something, learning from it, and then going again with a second iteration, I think is something to be very much embraced in terms of developing any kind of new proposition.
No, that's a really, really good example. We've definitely conditioned customers to think that mortgage application means paperwork. It's just embedded somewhere in somebody's psyche. Like, I think it's just passed on through generations. Yeah, if you're going to apply for it, you need your bank statements and your last P60 and blah, 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 blah. So yeah, and maybe when we start using open banking in other areas of our financial life, it'll be easier then to get customers to engage with it.
What's I think it's really interesting because it's I think people don't realize how invasive some technology can be, right? But when you actually lay it out, like the terms in an open bank, I was doing it this morning when I was using I used my Yolt app to sort of look at all my accounts in one place. And when you actually look at what it says it's got access to, it would definitely scare somebody, right? But they're giving you the same information in a different format, and that doesn't faze them. So, or they're giving away their life on Facebook, but then don't want an NHS track and trace thing when, you know, Facebook probably know where they are better than the government do. So it's really interesting how people's perceptions of that technology at the moment it is. And Alex is right. You know, it's what a great way to try it. Because we hear a lot about it, but if it's not being taken up, then that's not the solution the customers want at the moment.
Yeah, I think the thing for open banking is the inherent value in it is really clear for the financial services market, but it's not clear at all to customers. I don't think we've explained or articulated to customers what you get if you give your open banking consent yet. And I think until we do that and link it to, as I said before, the sort of emotional purchase point that's around whatever it is you're buying, whether it's a mortgage or a loan or credit card or whatever, people will still be mistrustful of it. And I think that's where the ground has got to be gained to really get the value from it.
Oh, that's a really good point. So just outside of open banking then, and I'll ask each of you the question, so whoever can jump in first. Which of the other big technology trends do you see having the biggest impact on the mortgage market?
I'll go if you want. I think quick decisioning, I think is really interesting through eligibility and affordability, and to have property information up front. I think that helps no end from a broker perspective, and I guess from a lender, you know, if we know what they're thinking in their decisioning, and we know what they're looking for in terms of a property, and we're looking, you know, we can knock out the things that won't work. I think that's going to be a big win. The other thing for me is transparency. So transparency around the information you provide, transparency around real-time status updates across all parties. You know, there's a lot of repetition in a mortgage journey, and how do we cut some of it out? So, you know, I tell them, they tell this. Like, how do you use a blockchain to pass out the information? You know, we hear a lot about blockchain, but we must be able to share this information more securely and seamlessly. What is it that we're going to do it? And I think that's a really interesting, because at the moment you're sort of waiting for, you know, sometimes you're waiting for a bit of paper again, Maria, so to get your offer, right? And that's crazy, right? So, you know, how do I get it simply? How do I, you know, and then how do I pass that on to the next person? So for me, transparency is a word that I think we will hopefully hear more about over the next few years. I think, you know, being open about how we're doing things is going to be really important.
Yeah, wouldn't it be nice to take all of that white noise out of the entire journey for everybody? It'd be great. What about you, Alex? What other things do you think might be big for mortgages?
Similar, but I was going to link it to sort of more widespread adoption of API technology. And sometimes I sigh when people mention APIs, because they've been talked about. The predictions that were made around APIs in 2016, 2017 probably still haven't come to fruition. But I do think that we're getting there as a market in terms of lenders realizing the value, as we have, of being able to have a kind of consumable data that reduces the need for rekeying, duplication of effort. So exposing up your credit decisioning process, your mortgage application processing engine, to allow that data to come in from wherever it's captured. And what that does, as soon as you do that, it suddenly means that wherever the case comes from, you can get it in without the need to rekey it. It also opens up the opportunity for things like multi-dip or pre-qualification, or giving brokers and customers better chance of getting a mortgage or getting the right mortgage earlier on without wasted effort, be that advice or that's sending the customer to the wrong lender, or customers who are going to fail somewhere down the line. Bringing that forward, I think, will all be done with APIs. And I'm confident that we'll get there, I think, in the next couple of years. And a lot of the investment that lenders have had to make in their back-end systems and processes, because it's not just as simple as creating an API, it's where does that data go when it arrives from the API and the architecture that sits underneath it. And I think, well, it's, from Skipton's perspective at least, we've done a lot of the heavy lifting on that now.
Yeah.
So when APIs are here, they'll be here to be used in anger with real outcomes for customers. Rather than just the kind of white noise around using it as a buzzword to show that you're serious about tech. So
I think that's really important there, Alex, around failure, right? So it's not necessarily failure. It might just be the wrong moment in time. And I think if you can tell somebody that quickly, then you can educate them, because I do believe that people's financial education isn't a level where we need it to be. Then we can take them down a nurture journey. We can say, do you know what? We can fix your credit score. We can fix this. We can fix that. We can do that for you. So actually the advice becomes really valuable again. So that from our point of view, it's like, okay, so the bank have said this is what we know about you. Okay, let's get you organized. Let's get you ready. Let's get you ready to jump back in when the time is right.
Yeah, from a lender perspective, we know that a quick yes is great for all the reasons I've already said around certainty, but also a quick no is very helpful too, because if it's going to be no, you'd rather know straight away rather than when you've sent us documentation or you become invested in a process or you've told your vendors that you're likely to get a mortgage offer. So yeah, a quick no is as important as a quick yes.
Yeah, no, that's good. So it won't be any surprise, I guess, to anybody watching that as somebody who works in the technology side now with financial services, that I'm a huge advocate and an evangelist for distributed ledger and for blockchain and for how I think it might work in financial services. And we've definitely seen some very cool proof of concepts. So one of the things that I do worry about with the industry's API approach is that we are creating a lot of point-to-point connectivity, which is turning into a bit of a spaghetti junction, and that comes with cost, and somebody has to maintain it, and there's a lot of change involved in that, and it's actually getting quite messy if we ever wanted to undo it and all move to distributed ledger. So yeah, moving to something that was a bit more industry standard, I think, with more collaboration, where we joined up some of these document sharing or data sharing processes, I think would be hugely helpful. So on that note, there are quite a few government and industry initiatives that are coming down the line: home buying and selling group, digital identity, that kind of stuff. And Matt touched on a lot of the data sources and property tech information that's going to be available much further up front in the journey. Actually, even before the customer goes to look at the property, we could have a lot of the data that the lender would need at that point. What's been your approach to managing this kind of short-term improvement versus long-term planning for those things that we know are coming down the line? Start with you, Alex.
I think centralized ID and V is long overdue. And it is the most obvious part of the journey, isn't it, where there is significant inefficiency all the way from the estate agent through to the broker, lender, conveyancer. It's ridiculous that we ask customers to prove their ID so many times. So the sooner that nut is cracked, I think the better for the industry and the better for customers. So let's hope that there's some progress on the various solutions that are out there to counter that one. In terms of long-term versus short-term planning, invariably a lot of the tech, however agile you are, takes time to build. So you need to make sure that there's no kind of redundancy risk, or no one wants to build or integrate with Betamax technology when VHS takes off. So what we're trying to do with a lot of our tech, and particularly the architecture work, is try and be as agnostic as possible. So build solutions that can be readily adapted depending on what comes out of the regulatory world or what comes out of collaboration between lenders and intermediaries, and being able to adapt in an agile way to that, regardless of what form that takes. Mm-hmm. What you don't want to do is really long-term, very expensive waterfall projects that deliver bits of tech 2 years too late, and then that tech's quickly outdated or superseded. So having a really agile approach and being able to reiterate is where you're going to get sustainable competitive advantage. The old-fashioned day of 2-year projects, I think, might be necessary for some lenders, but I think that creates a lot of risk.
Yeah, I think we are seeing that. Matt, what about on the intermediary side?
Well, I think Alex has hacked my piece of paper because he's literally just said what I said in terms of the ID piece, because I just find it astonishing. So, yeah, the ability to passport that, I think longer term is going to be fantastic. We've been talking to some companies around that, and I think if we can get the lenders on board and the solicitor and the estate agent, fantastic. I think that's a great thing for the customer, because it just feels a better solution. The other thing is that actually some of these things we talked about in terms of bureau, digital ID, open banking, they actually cost. So it's great that we can do it and we're going to be able to acquire the information up front, but I think some of it needs to come down. I think some of it's just too expensive at the moment, I think, to get real mass adoption. So I think that for me is like something that I think we need to work together on. I think the collaboration thing is really important, to try and make sure that when we do build something, it's fit for purpose long term, not just a short term fix. And that just takes dialogue. We have to talk to each other all the time. So, we are trying to build a platform that is open, that can connect to anything, because you see so many wonderful things out there that you never really know what's the next game changer. You think you can try and predict it, but what is it going to be? So we got to be careful. It's interesting your point around APIs. They are just the go-to fix at the moment, but I think if we can get some of those things working in the short term, then let's worry about some of the more complex technology that can really supercharge what we're trying to do down the line, because a mortgage transaction is taking too long in terms of a property purchase.
I think it actually takes longer now than it did pre-2008. I think in the last few years, we've seen those times stretch out to I think the average is about 20 weeks now for purchase completion, which feels like a really long time. And
Land Reg are doing some really, really, really good work. And I think, once they can digitize, local searches and do all the things that they need to the property data and all the other stuff that they're working on, I think that's going to be a real big game changer there. They've got some fantastic open data that they're providing. And I think sort of come back to the point that not everything's going to cost. And that's a really good thing, because it means we can get a property, a log of data, property data that is accurate, that's come from one source. I think there's some really interesting things around, but short term, I think we're planning for long term, but actually we've got the short term stuff is here and now. We just need to do it, and then we just need to build it. And some of it's trickier than we think.
It's good that it's happening. It's good that it's coming down the line. Sorry, Alex.
Sorry, I think Matt makes a good point about the sort of post offer part of the mortgage process, which is sometimes neglected. So I've done it in what I've said today. Getting to that moment of truth in terms of the mortgage offer is great from a lender perspective, but if you really want to complete and get through on the house, there are lots of parts of that journey that are really inefficient too. And actually, particularly, I don't want to bash conveyancers, particularly because we all know how busy they're about to get, but standardization and efficiencies in the conveyancing world is much harder to achieve, just because of how fragmented that market is. It's hard enough herding lender cats into agreeing common standards for things, but in the conveyancer market, where no one really has more than a 2% market share, agreeing to some kind of common digital standards that might speed up that part of the process, I think is much, much harder, and it's going to take a bit of time. Yeah,
but hopefully we will see, now that the Home Buying and Selling Group have started making that progress, and like you say, the Land Registry have got their project kicking on to next stage, hopefully that will be the catalyst to bring the rest of that industry along as well. So yeah, definitely watch this space. Alex, one of the things that you mentioned there was just around your ability to be able to try different types of technology and to make mistakes and to learn things along the way, but to be able to have that, to be able to play with stuff and see how it works and not make, 2-year decisions to waterfall something. So do you think we're seeing a widening gap between the companies who have the ability to do that, either tech expertise, budget, resource, even just headspace, to take advantage of those new technologies and trial them, and then the other half of the market who are having to navigate this kind of big multitude of choices, try and understand what all of this tech is, work out which horse to back, but who can't afford to make a wrong turn and then end up playing catch up? Do you think that gap between the kind of haves and have-nots is getting bigger?
I think so. And actually, I think the headspace point is probably the most important. It's around culture. So we've got a culture at Skipton where we're encouraged to be brave and try new things, and that there are low-cost ways of playing with tech and exploring things and building proof of concepts that you can then take to your executives and boards as longer term investment cases. So, I mean, that's been our approach to it. We're not trying to do everything in one go. It's piecemeal. Which parts have the most impact on that customer outcome, and keeping ruthlessly customer focused is the way to do it. We see actually, though, this tech and investment in it and getting it right now can give you some short-term competitive advantage, but actually a lot of this stuff is going to become hygiene factors for customers in 3 to 5 years. Will a customer wait 20 days for a remortgage offer in 3 to 5 years' time when they can do just about everything else instantly? I think no. So being at the forefront of that, yes, it might give you some day one kind of advantage that you can show on your P&L, but actually in the long term, it's more of an existential threat if you don't adopt some of this stuff. There won't be many players that can exist in the kind of direct line space that are disconnected from everything, come directly to us. And we are very much trying to stay at the front of that curve for that reason.
That's excellent. And Matt, do you think you're seeing the same in broker world? Are you seeing a bigger gap between hubs, networks, firms who can and can't?
I'm not necessarily convinced it's about money, to be honest, because I've seen some banks who've got loads of money but build some of the worst technology you'll ever likely to see. So, and then you've seen some of the challenger banks do some really fantastic stuff. So I think it's about collaboration and finding the right partner sometimes, and actually, finding those suppliers or those other companies that can give you the technology. But I do believe an awful lot of what we're talking about will just become the norm. So I think the price will come down. And we'll all be able to access it. And actually, probably the most important thing that any business needs to do is what's the USP I've got? What is it that I do that sets me apart from everybody else who's got all the other things because you'll be able to get the stuff off the shelf. So I think from our point of view, it's like that sort of the big thing that we need to do for our businesses is around giving them the tools that mean that they know what their customer wants and how we can identify their needs. And I think that and looking at how we can coach them to do so. I think there's the USPs around, can we use some technology to help people through the, I'm renting at the moment, I'm looking to buy, how do I get from here to here? So, for me, we could all go and get an on-FIDO solution to get an ID. And I think probably all of us will eventually. And there are other suppliers available. And it's going to be around those things. Like what sets me apart? How are you using technology to feel it feels personal? That it's not just as I said before, sort of a throw as much mud at the wall and see what sticks kind of approach. I think it needs to be much more about you as a person, and I think that's where the exciting thing's going to come along. And I think the banks that get that right are the ones that can succeed as much as the brokers, to be honest.
Well, hopefully that plays into the building society space, in that it's always been customer first for them, and it's always been around engagement and giving them best value and giving them best service and having the best NPS and that kind of thing. So you would like to hope that the building society is keeping that mantra as the one thing that will actually help them navigate through all of this. That's a really good point. I think we could probably spend the rest of the afternoon talking tech, but in the interest of time, let me finish with a quick fire question for each of you. What one piece of advice would you give to any building society who are looking at their technology today to create a better broker and customer experience?
Work together. It's good to talk.
Don't focus on your process and policies. Focus on the customer.
Both excellent answers, thank you. So I'm going to wrap this up now. Thank you so much to both of you for your time and for sharing your thoughts and your advice so openly. I hope the audience enjoyed it as much as I did. It was really, really great to talk to you both. So stay safe and hope to see you both soon. For our audience, please stay on and look forward to your next session on the main stage. Take care. Goodbye.
Thank you.
Thank you.